So tell us a little bit about how we can hedge potentially with some Asian assets, all of this uncertainty and volatility coming from the geopolitical side of things.
Thank you, Sherry. Yeah, you're right. So much uncertainty going on. Where is a safe harbor or safer harbor? We think Asia offers some security as a haven there for a number of reasons. One of them would be a large amount of the equity markets have lagged, so they don't have that valuation headwind that others do that are much more difficult. And particularly if you can find equities, which we see in the ASEAN region, that are commodity focused, that are more domestic focused, that are not as widely held, so a little bit more sticky. We think these spaces offer interesting value in the current market. And Malaysia is probably first to the top at the moment for us, alongside some other, as I said, ASEAN regions. They hold a lot of the key. And then also you've got China after the NPC meeting later, the National Party meeting later in March. We do think we're going to get meaningful easing after that. So there's a number of tailwinds in Asia compared to the rest of the world.
I find it really interesting that you actually like some of these ASEAN nations, because we continue to see, of course, pressure coming from COVID. Where are you seeing the most opportunities right now?
Well, Terry, like you said, there's a lot of challenges around. There's still COVID challenges. There's still reopening challenges. I think the ASEAN region, unlike maybe North Asia, where the COVID lockdowns are more stringent, some of the ASEAN regions are actually opening up. Living in Singapore, there's a lot of ETL lines now right around the area. So I do think the reopening trade is starting to ease and become a lot easier. We're doing more business trips around the region, which I think is constructive. Then if you take into consideration the spaces that are more commodity exporters, that are less focused on European trade, who are potentially going to be feeling the pain a lot more, I do think that the ASEAN region has quite a lot of interesting space to add today.
If there's going to be muted growth and potential further downside out of China, does that impact your kind of level of constructiveness when it comes to emerging markets?
I think we've been talking about weakening China since October. We said even the first quarter was going to be tough, and we do think that from an economic perspective, it's still going to be challenging for China. Market participants are forward-looking. We're going to be looking to when do we see a turnaround in this dynamic? When are we going to start seeing more support? And now a real thesis for China is 2022 is the year of implementation. And for implementation, you need stability. So we think whilst the regulations are changing, we think probably the worst of the regulation shifts from a market perspective are behind us. We do think easing is coming through. And we think whilst this is still a very political year, we think there will be real focus this year on keeping that stability. And that's going to be good for markets in China and be good for the region. And you take this into contrast with what's happening in Europe, what's going to be happening in the US with domestic politics later in the year. I think this just lines up to an interesting space, also given the valuation differential between the two.
Gareth, I want to take you to our question of the day on our MLive blog, which is really asking the question of how investors should be viewing or pricing the Russia supply shock, right? Is it inflationary? Is it stagflationary? And I think it's interesting because the answer to that question is going to kind of inform what risk you see. I guess a more hawkish reaction from central banks, or the possibility of a central bank misstep.
It's a tough question, right? It's still so early in the process, and given this seems to be much more of a financial sanction-driven war, it's obviously not on the ground. But we do think that this means that probably the biggest risk for financial markets is commodity chaos. Commodity chaos in the sense that one of the largest exporters of grain can't put their grains on ports, can't get it onto trains. The ships won't be serviced when they hit different ports. The same, the Black Sea, the oil that's going through there gets stored. There's potential pipeline issues. These are some of the risks that we see for commodity chaos. And we think this commodity chaos is going to drive further market direction when it comes to inflation. We've already seen backwardation of the commodities index is very bullish for the space. And really, I think one of the biggest things is a lot of investors, a lot of economists saw inflation moderating, starting to moderate as soon as, April, May. That is starting to get pushed further back. Now, if moderation is getting further back, that's when central banks are going to get really nervous. And this is why we feel that at the moment, central banks are still focusing on inflation. Growth is still okay. You look at surveys out of the US, they're still constructive. Business activity is still solid. So we do think that it's going to be more focused on inflation.